Every transaction a business records ends up in one place, the general ledger. But what exactly is a general ledger, and how does it connect journal entries, the trial balance, and financial statements? Hello there, I'm James, you're watching Accounting Stuff, and in this video, I'll attempt to explain the general ledger in less than 2 minutes. Start the clock. What is a general ledger? The general ledger is the main accounting record that stores a complete history of a business's accounts and transactions. Think of it like a huge filing cabinet. Instead of storing every transaction in one giant pile, the general ledger organises financial information into separate accounts. Here's how I like to picture it. We have a complete set of a business's accounts, which might include cash, equipment, owner's equity, revenue, and expenses. And if we zoom into any one of these accounts, you'll see every journal entry that has affected it over time. Every increase, every decrease, and the running balance. Take the cash account, for example. Increases in cash are recorded on the debit side, decreases on the credit side, and the difference between the two gives us the account's balance. As the business records more transactions, the account fills up with more information, which is all stored in the general ledger, every transaction and every account. How do transactions get into the general ledger? Let's look at an example. Imagine we run a gym in Pewter City. At the start of June, our books look like this. We have $20,000 in cash, $10,000 in equipment, and $30,000 in owner's equity. These are the opening balances recorded in our general ledger. We also have revenue and expense accounts, but these are empty for now. They'll come into play when we work through these next 3 transactions. Transaction 1. On June 7th, the gym purchases some new training equipment for $5,000 in cash. This is a financial transaction because it involves the transfer of money and monetary value. So we need to record it as a journal entry. We'll start by giving it a unique journal number, a date, a description, and the accounts affected. Equipment and cash. We debit equipment by $5,000 and credit cash by $5,000. Now, how does this journal entry affect the general ledger? Well, equipment and cash are both assets, represented by the A in dealer, which means debits increase them and credits decrease them. So when we post this journal entry, we debit the equipment account to increase it and credit the cash account to decrease it. Equipment goes up from $10,000 to $15,000, and cash decreases from $20,000 to $15,000. Zoom out, and here's our updated general ledger for Pewter City Gym on June 7th. Now for transaction 2. On June 14th, the gym receives $2,000 cash for hosting a training camp. Let's create the journal entry. We'll debit cash by $2,000 to increase it, and we'll credit revenue by $2,000 to increase it. Revenue is the R in dealer, so it's a normal credit account. Now we post the journal entry to the relevant accounts in the general ledger. Cash increases from $15,000 to $17,000, and revenue increases from $0 to $2,000. Zoom out, and here's our updated general ledger on June 14th. Now let's record one more transaction. On June 21st, the gym pays out $1,000 in rent for its training facility. So let's create another journal entry. We'll debit expenses by $1,000 to increase them because expenses are represented by the first E in dealer. And we'll credit cash by $1,000 to decrease it. Time to post. Expenses increase from $0 to $1,000, and cash decreases from $17,000 to $16,000. We're 3 transactions in, and our general ledger is starting to tell a story. We can learn more about it by preparing financial reports, like the trial balance, which I'll show you in just a moment. But first, why does the general ledger matter? Well, it's the one place where all of a business's financial information lives. Instead of searching through individual journal entries, we can quickly check the balance of any account and zoom in to see exactly how we got there. We can also use the general ledger to prepare key financial reports, like the trial balance, which is the foundation for making financial statements. So how does the general ledger relate to the trial balance? A trial balance is an accounting report that lists every account and its balance at a point in time. After posting all 3 transactions, here's what our general ledger looks like at the end of June. We can use it to make a trial balance in one simple step. Watch carefully. We take the balance from every account and transfer it across. Debit balances go on the left and credit balances go on the right. And if our books are in order, total debits should equal total credits. So the trial balance is in balance. It's that simple. From here, the trial balance becomes the base for preparing financial statements, like the income statement, the balance sheet, and the cash flow statement. I'll show you exactly how to do that in this video right here. So give it a click to carry on learning, and I'll see you there.